Good morning. Welcome back. I just started. All right. Hope everybody had a great weekend. Hope things are warming up for those of you up north. They certainly warmed up here. We got close to, or maybe it already was 80 degrees. Anyway, hey Pat, how you doing? All right, so one of the things we talked about market internals last week, and that we finally did get an agreement between breadth and sentiment to get a sell signal. Breadth didn't get to quite the extreme that we normally would look at for it to get to the moving average of it. However, after that extremely bearish decline that preceded the advance off of the low, that is typical. So, and that's why we look at those bands that we reviewed last week. So one of the questions that I also was thinking of besides the internals is Amazon also leading the way for the markets to lower. And so looking at that weekly chart, whether it's Amazon, there's a few things to take note of here. While it is, and I'm to look at what's bullish and bearish about it, and it kind of relates to the markets as well, is that, let me just get a drawing thing out here. Obviously, it's in a downtrend, right? Let's change the color. It's in a downtrend. However, like the market or many sectors, the depth of retracement to the prior swing high is relatively deep. Well, I'm eyeballing that, and let's say it's 85, 90%. So typical downtrends, the lower high comes in at around 50%, 60%, give or take. Nothing to do with fib numbers, just about where they usually turn. So this was positive. And let me clear this. However, just look, and I know this, there was gaps involved here, but this is a weekly chart. So this cleared that high. So at one point, this looked positive. You can see right here on the weekly chart, on the daily chart, where it went up and it cleared the high. And on the earnings that it had reported, it gapped down, which, we've got now a topping tail bar that cleared a prior high and came all the way back down under that low. While it didn't close below it, it closed below its open and all the way down here. So that's a pretty powerful signal. Now, what we need to see is it trade below that low. And so I'm thinking, if Amazon's going down and possibly doing this, well, that's not going to be very great for the NASDAQ. And we'll look at those markets, and they're close to what historically would be turning points as well. Excuse me. I think I'm getting a cold or something, which I don't know. Now, this could trade inside of here. So ultimately, it's got to break that low to get a signal from this time frame, which is that red bar's low there on the daily time frame. And we've got alerts. We're waiting to see what happens here. But, one of the concepts that we look for within setups is some type of a shock, meaning what was going on where traders believed, or investors, hedge fund managers, whoever, people were thinking one thing and something happened completely in the opposite direction. That's a shock. Define shock. Show me a picture, since we're technical traders, to show me what a shock looks like. And that's it. Now, this can happen in an uptrend where it's making higher highs and higher lows, and that's not so powerful a shock. And it's just, okay, there was some profit taking. If there's a retest pattern and there's a shock, well, that's powerful, even if it's in an uptrend, and highly suggesting that it's going to come down. And you can get a shock within a downtrend, which is more powerful than that. Now, this depth of retracement here is a little bit of, not the textbook example we'd be looking for. Nonetheless, it is trending down. It did not take out major resistance. And so what I talked about in Monday's letter as it relates to the broader markets and this pattern was that this downtrend and the retracement that came off of the December low within this powerful trend was that this opens up while things look like they can go down because we're getting the sell signal from our internals. Because of that depth of retracement, maybe we're looking at what might be a head and shoulders bottom versus where if it was a shallower retracement, a retest and reversal or a new low. So that's where we see we're at in the markets right here now, where, something like Amazon, which is created a reversal. We're looking for confirmation of the reversal, trading below that low. And now we're going to see if the markets follow suit. Now, we've got lots of earnings coming out this week, posted a whole slew of them in the letter. The ones were trading at least around 500,000 shares on a 30-day moving average. I posted that in Monday, today's letter, actually. So we'll see. Google's coming out after the close. Can Google save the day? Facebook moved up on its earnings. Let's see what Google does. And interestingly, this market, because I've coined Mr. Schizophrenic over the last year or so. And we'll look at Intel. So from the bearish point of view, we always have to be objective about in our views and say, is everything firing on all cylinders, or is there like some craziness going on here, or whatever do I need to pay attention to? And here, Intel gapped down on its earnings that day, and here's a shock. Wide range bar clearing the highs, and it gaps down, super bearish. This thing's supposed to keep going down, and Friday, it has a monster day and a reversal up. So while you've got these internals telling me, hey, historically, this is a sell signal here, wait for the price to do what it needs to do. Amazon is a sell signal. It needs to trade under prior weekly low. And Intel here is totally ignoring, this is a big mess here with these bars up and down, but totally ignoring for the most part, this bearish gap down from a wide range bar breaking out on volume. So anyway, this market has been erratic over the last year. And, we've had this advance, and now we're at a potential turning point. So we need price to give us the trigger, and that hasn't happened yet. So here you can see the advance. And one of the things that I talked about in the letter was that this is the only swing low pivot during this advance. So even, during, while having this, big decline like that, typically when prices come off of a low, you get retests or you get some corrections along the way, and you get pivots. Pivot being defined by a bar with three higher lows adjacent to the pivot bar to the left and right. And this is the only one that has three. That's unusual, in an advance off of a bearish market low. So not your typical market, not your typical counter trend rally. Nonetheless, we're up into this resistance area here. Momentum slowed down on Friday. Maybe it was just Friday, but the prior Fridays over the last 2 or 3 weeks or so, buyers are actually buying pretty much into the close. So we had a neutral day Friday, and I'm using Thursday as a line in the sand here. Ultimately, this is the prior weekly low, but I think if this retraces, and if it takes out, here's Thursday's low, I should say. If that takes out that low, I think that opens the door to at least down here, and we'll see what happens from there. Qs, same story, but, it had an inside day. So here, where it cleared these highs, we have the potential for a breakout bar failure since Friday was an inside day. So we'll see if this breaks, and then ultimately, it comes down into that gap fill, and we'll go from there. If it holds here today and takes out the high, well, then we're expecting a test of the 200-day moving average. And, you've got a prior high up in this area, but in the spiders, that 200-day is in alignment with absolutely nothing. and the resistance is up there. So there is a void, of that above that 200. Russell actually held up pretty well, and it's got a clear void to go, but nonetheless, we've got our lines in the sand with alerts to see which way it's going to go. If it can clear the highs, and right now it's just consolidating up there, it could go higher. The transport's kind of grinding its way up. So, a lot of wait and see. Today's pretty neutral. Not pretty. It is a neutral open so far. So we'll see which way they go in the first, 10, 15 minutes or so. The Dow popped above here. So a move below Thursday's low, I'm leaving this as a little failure, moving up to a new high along this trend. Pay attention to it, because that's going to be a bit of a shock. Right? Uptrend, consolidation, new high within that uptrend, breaking down below here is going to bring in some sellers. And futures will just run through quick because it's getting a little late. And you can see they're starting to roll over here, but we can't get too bearish on our bias just because of a stall here. It's in an uptrend and so on. So a little narrow range day so far. Qs just kind of drifting here. And I like to take a look at, as I always do, the hourly chart just to see what it looks like. Where's our support? I'm using that as a line in the sand for initial line of support. It would not violate the trend on the daily time frame. Right? It would not, but on, as it broke out, breaking below here does open up the door for a further correction and leaves a relatively significant high above to be dealt with if it's going to be able to go higher. Dow, same thing. You can see a little topping tail up there, but we need to see it move down here. Now you might be thinking, well, what about those lows? Well, I think breaking below those lows right there could be a wiggle, and I wouldn't get, too excited about that happening. I wouldn't actually do anything because it's relatively close and you just might get it put right back in your face. But do notice that this pop above here, which is the topping tail, that was sold into. Bonds are also moving down here a little bit, but overall just going nowhere. And oil also down. You see everything's red here in the futures, but, just being down doesn't mean a lot until you look at the chart. And of course, the chart within the time frame that you're looking at. So this is just an inside day. It's a red bar within this upward move. You see other red bars didn't do very much. It's on an intraday chart. If you're an intraday trader, it's a shorting opportunity. Right? Hourly chart, a little extended, get a failure up there. You can move down to the 5 or the 2 or whatever as an intraday trader. And gold, and pulling back from its new high within that uptrend, and we'll see if it holds its support. That's it for me. All yours, Dan.
All right, thanks. Good morning, everyone. I hope everyone had a fun Super Bowl Sunday. As you can see here, we did a lot of scanning last Friday together, and I did some more, and that's why I have a huge watch list here. And I also did a bonus video for both letters, just going over the compelling pattern in every one of those that I just typed right there. We just in the video talked about why they're compelling. Open positions. We got this IBB call spread that's been giving us a little heartburn here on this breakdown failure. BMY is gapping. We have a covered put, which is the opposite of a covered call. And our stop was 50.51. We'll watch that at the open 5-10 minute high. This pizza from Friday, wide range igniting. And we said it was too extended. We'd watch it on a bounce. And now, just eyeballing this, it's more than 50%. And so we might invalidate it as an idea. I mean, there's no idea now. It's just a watch as a short. Dollar Tree, we have a covered call. That's fine. NBev, covered call. Michael Jackson, these pot stocks. I noticed ACB and Cron. Cron's getting climactic on the daily and weekly, but it's a bullish 15-minute chart. That's very bullish pre-market, so it's still not ready. But we have a covered call on MJ in our ETF letter. What else we got? WWE, we're long stock. KSS, we sold a call spread into the close. Urban is another short that we got into on Friday. He's very weak. We're watching Weight Watchers under last week's low as a short, and that's just getting on board the train. AMD, we have a covered call. All right, so yeah, I have a lot here to keep an eye on. Let's look at some gappers here, and then we'll go ahead and look at some of my list and yours. ELOS, trading sporadic, breakout failures, breakdown failures, gapping up to 21 bucks now. It looks like a low on the monthly chart, but you would have to obviously go to the daily to look for your trader. I'm just curious because do you know what the news was Friday? And I do know it's been in the newspaper over the past couple of months about them kicking out the founder, CEO. And if it's in the middle of news that's pending like that, I have no interest in those. So just forget about it. Z-Lab. Oh, that was yours, trader. I put that on my list from what you emailed me. But see how it's spotty here on the 15-minute chart? I personally don't. I want a tight 15-minute chart too. These two had earnings pre-market, SYY, 65.80, bullish gap, but no setup. And it's kind of a 1, 2, 3. So it closed very strong. Clorox had earnings, 157. That's a bullish breakout. Clearing all of this. That's a put spread candidate. You know, it's going to be very spready at the open, but we'll come back to it. There's the ELOS. BMY, I got it in this middle one. No, I'm going to put BMY. Oh, no, I have it up here. Never mind. There's our IBB. Got to keep an eye on that too. Oscar November. Bullish gap, 21.55, but no pattern. Walmart, I thought it was down more this morning, but we looked at that Friday as a call spread candidate. And here's a breakout failure. This was trader also yours from last week. That's a bullish 1, 2, 3, 4. But I mentioned on the video that it's getting close to its destination. So I'm not sure what the target would be. And again, the same caveat I've been giving for a long time with the overbought internals. We will trade long, but we just got to when the music stops, get out of the musical chairs. STM, I like the weekly. The weekly has room. It's a 1, 2, 3, and you got bullish engulfing on the monthly. Breakdown failure. I like the weekly a lot. What I don't like is it's an ADR and that it's gapping far from the 20. Remember we talked on Friday, look for reasons not to enter. And I just gave you a couple.